Twitter is on. LinkedIn is on.
Hmm.
I'm just waiting on YouTube. YouTube is always a slow one. Okay. All right, so YouTube is on. Good afternoon, good evening, good morning, depending on where you are. Welcome to HTD.tax, where we do all things tax. We try to demystify this somewhat confusing world of cross-border taxation. We're gonna live stream. Obviously, we're live streaming this, but we're also recording it because some people did ask because they couldn't stay for the entire thing. It is being recorded, and it'll be available on our website, on YouTube, Spotify, SoundCloud, over 20 platforms. Basically, wherever you get your podcast, you will be able to get a recording of this. So it's no problem if you have to leave early. Bear in mind, though, that while we are tax and investment professionals, we are not your tax or investment professionals. So we're having a general conversation about general principles. If you want what we call actionable intelligence or advice unique to your specific situation, you'd need to engage a qualified professional who would advise to your specific needs. So again, we're having general conversation with general principles. What we hope is that you will emerge with what are the key concepts that you'll need to keep in mind as you navigate and as you retain a professional to advise you on your needs. So we want you to walk away with the key concepts. We're not giving investment advice and we're not giving tax advice. Okay, so with that in mind, we'll get into the questions that you guys submitted in advance. For those who didn't get a chance to, somebody's typing below. Okay, so if you didn't get a chance to submit your questions in advance, that's no problem. Just type them in the box below and we will get to them in the order in which we receive them. Okay? So without further ado, we have one other tax professional joining us. Hervé, for those who watched us before, he's meant to join us, but I guess he's running a bit late. In the meantime, we will start with the questions that have been posed. I'll go with one of the nice, easy ones first. Sorry, my bad. Cedric, sorry, Cedric. We have an investment professional with us. Normally, we just deal with tax. We're honored to have an investment professional. Cedric, please introduce yourself.
Yeah, so my name is Cedric Bernier. I'm a financial advisor for American expats in Europe, France. I am in the south of France, so near Nice in the French Riviera. And I've been here for a little over 1 year. Before that, I was with Wells Fargo Advisors in the US. I was a financial advisor there. So yes, I'm licensed in France, US, and UK. So I can help clients with pretty much everything they need. Yeah.
Okay, fantastic. So let's just jump right in because we have quite a number of questions and I'm respectful of everybody's time. What investments should US expats avoid while living in France? Cedric.
Yeah, I think one thing that I see often, assurance vie in France, it's a great tax deferred investment, but for Americans, it's not tax deferred in the US. So most of the investments inside of it, you're going to see mutual funds, ETFs, foreign ETFs. So then it's a problem in the US. So when you file taxes, you have some issues, and it can cost a lot of money. So I would say this is the main thing that I see that I keep seeing over and over. And typically Americans are not allowed to open them, but some firms offer it anyway. Or maybe some people forget to mention they're Americans because it could be French and American. So I would say even if you're French, if you are US taxpayer, you need to be aware of that. Yeah.
With us?
Oh yeah, I can hear you.
Yeah, you dropped for a little bit. Could you repeat the end of what you said? Some people forget they're Americans.
Oh yeah, because I have clients that are French and American, and they go to a bank and they forget to mention that they're American. So then they open assurance vie, thinking that it's totally fine, and then they start looking at the impact when you file taxes in the US, and it's not tax deferred in the US. So then that's an issue. So yeah, so any foreign mutual fund ETF that's not a U.S. Investment, you're going to have some issues with the IRS in the U.S. So you want to pay attention to that.
Right, and to get more specific from a U.S. point of view, it can be potentially a bit toxic, right? An assurance vie could potentially be a PFIC. Are we correct in saying that?
Yeah, exactly. Yeah, because most of the investments are going to be PFIC. Yeah, those passive foreign investment corporation. Those like investments that you want to avoid, they're going to be inside assurance vie. So the assurance vie is tax deferred in France, which is great, but since it's not tax deferred in the US, then you don't really have much benefit of having it. So I would say, yeah, that's one of the investment that I see over and over, that most people forget to file taxes and to declare it in the US. So after 10 years, you could have penalties, interest, so it's something to avoid. So if you can plan ahead, don't open an assurance vie. It's not good for you as an American. Yeah.
Right. And just to provide clarity for those who may not be familiar with what a PFIC is. So as Cedric mentioned, it stands for Passive Foreign Investment Company. And it was a designation created under the 1986 Tax Reform Act, I think under President Reagan. And it was a response to US domestic financial institutions who complained that US taxpayers could invest in basically foreign mutual funds and obtain tax advantages. So they found it unfair. So it not just leveled the playing field, but it created somewhat punitive tax treatment for those US taxpayers who invest in foreign mutual funds. So specifically looking at Code Section 1291, 1296, 1297. So you can be called upon to mark to market, and you have to pay tax on unrealized gains. So that for an investor, that is really a pain point. You're paying tax on gains that you have not yet realized. So you're paying tax on phantom income. So we're not saying don't invest in it, but just be aware that there will be punitive tax consequences to doing so. And so we definitely suggest that you get advice before proceeding on that one. Okay. Thank you for that. Let's look at the next question. Before, I'm going to have a quick look to see whether Hervé has joined us. Nope. I guess not yet. It's running late. Next question. My main concern right now is gifts. I'm making a gift to my girlfriend. She's a French citizen. So this person provided a lot of personal information. So I'm trying to distill it and keep it as anonymous as possible. So I'm an American citizen in France on a carte de séjour. But I'm U.S. tax resident. Obviously, as a U.S. citizen, you would be. So you're asking, well, okay, what are the tax consequences of making gifts to a non-U.S. partner? So it's essentially, you're looking, it depends on how much the gift is, right? There's an amount that moves with inflation. For 2023, I believe it's $17,000 US. So if it's below $17,000 US for 2023, no gift tax return would need to be filed. If it's in excess of $17,000, then a gift tax return will need to be filed. And bear in mind that I'm assuming that you are US domiciled for state and gift tax purposes. If you're not sure about that, you'd probably want to get advice, because being a US citizen doesn't necessarily mean that you're domiciled in the US for gift and estate tax purposes. Domicile for U.S. estate and gift tax purposes has a very specific definition. Unfortunately, it's not spelled out in the U.S. tax code, so we have to look at case law. So essentially, if your intent plus deliberate action has been such to signal to the Internal Revenue Service that you have ceased to make the U.S. your place of domicile and you're now domiciled in France, then this will be a different conversation. But let's assume that you're still U.S. domicile. You have a lifetime exemption for both estate and gift taxes of somewhere between 12 and 13 million. It moves in inflation as well. So you would be using up that lifetime exclusion. If it is that you want to give your girlfriend, if you're particularly well off and you want to give her $20 million, then the amount in excess of the exclusion may be subject to a gift tax. Once it's within the exclusion, it won't be subject to the gift tax, but it will be subject to a declaration. So I hope that clarifies what you need to do. You probably need to get advice just to make sure about your domicile and the nature of your relationship, and therefore the filing thresholds and the actual paperwork. Failure to properly report the give, it could be up to 30% of the unreported give. So it gets pretty aggressive. So you probably just want to make sure that you're doing things the right way. Okay, I hope that helps. Next question. Okay, I would like to know if in buying European stocks, whether a PEA makes sense for a US citizen. I believe European stocks would be taxable in France, but not in the US. And I believe the PEA provides a tax shield in France. But is there a tax shield in the US? Cedric, what are your thoughts on this as an investment advisor?
My understanding is the PEA, it's similar to the assurance vie. It's not tax sheltered because it's not a retirement account. So it's an investment account. It's not tax sheltered in the US. But then the investments, if you invest in stocks, then obviously you don't have the PIFIC issue. So then that could be fine, but you still have to worry about taxation in the US. The PER, Plan d'épargne retraite, it's a retirement account, then that's different. So then the PEA would not be considered a pension plan, so it would be taxable.
Okay, so just to be clear, there's the PER and the PEA. So the PEA is the Plan d'épargne en action.
Yeah.
And so the other one is?
Plan d'épargne retraite. It means like a pension, retirement, yeah.
Okay, right. And so just so we have it clearly, under either circumstance, it is not tax deferred in the US, correct?
Well, the pension is, yeah. So I have clients that have PER and they're tax deferred in both. It's the same thing in the IRA is tax deferred in France and in the US. And the same thing, the PER, it's tax deferred in France and in the US because it's a pension, a French pension, would be taxable in France when you withdraw funds from it, but it's tax deferred right now if you have one. The PEA is tax deferred in France, but it's not tax deferred in the US. So it's still considered a taxable investment. So it's sheltered like the assurance vie in France, but not in the US.
Okay, so both are tax deferred or tax preferred in France, but only one would be in the US.
Yeah.
Which is a PR, not a PEA.
Yeah.
And there's and furthermore, if I'm understanding you correctly, there's a risk depending on what you're investing in, that we can go back to the whole PFIC issue that we mentioned. Otherwise, if it's direct in a stock, then that's fine.
Yeah.
Okay. Right. So one needs to be very careful, because depending on what it is, you may have to make a PFIC declaration, as we discussed earlier. That's Form 8621. It can be a declaration on the Statement of Foreign Financial Assets 8938. It could be on the FBARs as well, depending on what you've invested in. So FinCEN 114, or otherwise known as a Foreign Bank Account Report. So I think really the thing that one needs to be careful of is not just the idea of whether it's tax deferred or not, but the danger of inadvertently finding yourself in that PFIC situation, which is quite punitive to that U.S. taxpayer. And I guess that's why it's super important for someone to consult with someone like you, Cedric, someone who's qualified and who understands both systems and is able to give that advice, as opposed to someone who just wants to sell you stuff and
Yeah,
they,
exactly.
they can be kind of secured us with the truth. Now, while we're on that point, I mean, aside from someone that's qualified, what else should someone be looking for in that financial advisor?
Yeah, so I mean, the main thing is to find someone that can understand your needs, both, in the US and in France, because what I see is I see a lot of people that have even a tax advisor in the US that doesn't really understand what's happening in France. So they don't really ask questions. They don't know what to ask. So the clients don't know what to disclose. So then to find people that actually understand what they need and what the risk and consequences are of investing in those investments, because you can be like years and years, investing in the wrong investment, and you're going to have, penalties and taxes. I mean, it might be a big problem later on. And sometimes people don't want to come clean because then it's too late. They feel like after 10 years, they should just, not, do anything about it and just, but I feel like, the IRS, I mean, they're hiring thousands and thousands of people. So, I mean, there's a great source of income for, the IRS. I would say to not look at it, not, turn a blind eye, just deal with it if there's a problem. Tax professionals, like yourself, you guys can figure out a way to get the clients back on track and compliant. But if you're planning or you don't have any investments right now, to make the right decisions before you start investing, to have a plan, because Americans want to have a great retirement, and when you're in Europe you feel like you cannot plan because you cannot invest anywhere. So to have a team around you, a tax advisor, financial advisor that understand your needs, you can plan and still have a great retirement plan.
Fantastic. Thanks for sharing that. Okay, and again, for those who just joined us, if you haven't had a chance to submit your questions in advance, please feel free to type them below and we get to them in the order in which we receive them. The next question, this is question 4. Can I open an IRA or Roth IRA while living in France? Cedric.
Yeah, that's something that we do. I mean, that's the main thing that I try to bring to my clients, is bring some value and some peace of mind. Because if you already have an IRA in the US and you're a custodian, or the firm is maybe not allowing you to change your address, so you're going to keep it with a US address even if you don't live there. But you can, and that's something that most people don't know, you can open an account with your French address without any issues. There's not many custodians allow it, but we work with partner with custodians that will do that. And then it's peace of mind for the client that they know that they get mail in France, everything is set up with their French address. And then if you have an IRA but you don't have a Roth IRA, then you can open a Roth IRA while being in France. You can contribute depending on the earned income. But you can, if you qualify, you can contribute to the account, and you can also do Roth conversions every year. So you have up to December 31st each year to decide of the amount, and then you can convert from a traditional to a Roth, so you can get that tax deferred and tax-free growth.
So that's good to know. You mentioned with the Roth, assuming that you assume that there is income, right? Because you need to have taxable income, right? Yeah. So that I remember seeing a debate. There was some teachers at an international school who were arguing together with the preferred tax advisor that the only reason that they don't have income is because of the Section 911 foreign earned income exclusion. So were it not for that, they would have income and therefore able to invest in a Roth. So they were planning to pick a fight with the IRS. Do you know anyone else who has taken that position? Any other expats and have won?
I don't know right now. Yeah, I don't know if any, but yeah, I know that's something that hopefully will change. But I would say even if you don't contribute to the Roth, if you can contribute to the traditional IRA, then you can do the backdoor Roth. You can convert over time. But yeah, I think if you can, that's great. If you cannot contribute, at least you can make sure that your current IRA is in a place where your French address, is not an issue. Yeah.
Okay, understood. Because we're already aware that some platforms in the US don't like dealing with clients who've moved outside of the US. And then I've seen some clients say, well, hey, I use a VPN and it's fine. And then I have other clients that say, no, they can tell when I'm using a VPN and I still get locked out.
Yeah, the stories that I hear the most is right now, it's you have an account, you have an online account, so all you use is the online account, but then it's shut down. So then to reset the online account, you need a US phone number. Then it's an issue if you don't have a US phone number. And then some platforms, as soon as they find out that you're not in the US, then they can shut down the account. So I used to work for Wells Fargo Advisors, and they made that decision, financial decision, to get rid of the expat market. They didn't want to deal with expat. So pretty much, I understand I had to give those the notice to my client. I had to let them know, well, I'm sorry, you're in Norway. We've been servicing you for 10 years. We have to let you go. We have to close the account. So it's happening more and more. You see Merrill Lynch, JP Morgan. I mean, and you see even Fidelity. So it's kind of all over the place. The firms are making that financial decision to not, deal with the expats. So you have to be aware of that especially if you use someone else's address, you might not get an email. You might not get the notice, because if you're not looking at it, you're not paying attention, the account could close without you knowing about it. So that could be a big tax event.
And to be clear, because there's been, again, some discussion that this has nothing to do with SEC rules. It simply has to do with the policy framework for the financial institution. They don't want the additional compliance burden, and which comes at an additional cost and an additional risk when you deal with Americans abroad. Am I correct in saying that?
Yeah, and it's also like even some firms don't allow it, but then it's each advisor decide when they apply the rules, because pretty much an advisor can know that a client is overseas, and they know that they cannot change the address, and they're not going to look at they want to keep the account, the revenue coming in. So sometimes the advisor eventually will make the decision, without, sometimes it comes from management. If your boss says, you have to disclose it, then at some point the advisors have to be on board and go with the firm. But with Wells Fargo, a lot of advisors were kind of still hiding it, and you could tell that at some point management said, no, there's no exception. So then some firms are going to be kind of slow to make changes because they want to keep the clients, but then at some point they're all pretty strict. In the last few years, you see more and more firms making that decision, and it's a financial decision.
Absolutely. Okay, so next question, going down our list. All right. Okay. Do I pay VAT, or do I charge VAT when I invoice my clients outside of France? I guess if you're an entrepreneur, you're self-employed, and a consultant, we have many people like that, and that is a question that commonly comes up. It really depends. I was chatting with Hervé about it earlier, and it's a shame that he isn't online right now to discuss it, but the kind of questions he would ask would be, are you selling goods or services? Are you sure that you have no clients in the EU? Is it strictly outside of the EU? Do you sell to companies? Do you sell to individuals? Do you sell through an online portal? If so, where's the online portal? So on and so forth. So it's not an easy question to answer. But having said that, generally speaking, if you're a simple service provider and your clients are outside of the EU, chances are you may not have to charge VAT. But again, you'd want to get specific advice about the nuances of your situation before you go forward with that. Okay. Next question. What should I do if my brokerage account in the US is frozen, or if I receive an account closure notice? Cedric.
Yeah, so we kind of talked about it, but I think the main thing is to not panic, because if you don't know that there's an option, then obviously it's probably it's pretty hard fact that the account is closing. There's nothing you can do, but actually we can do something about it. Everything can be done electronically. So when I have a client and he gets that 3-month notice, it's really easy. We can open an account literally within 1 or 2 weeks, and then everything is done electronically, so we don't need to send anything by mail. And then we can even transfer funds electronically with most custodians, most companies. So then I would say it's better to plan ahead. Obviously, if you can do it before something like that happens, then it's better. But then if you can and you get that notice, then it can be done within a few weeks. So as long as you have your statement, just need usually one statement, so we can review the account, and then we can pretty much create the account and transfer the funds within just a few weeks. So it's possible.
Okay, fantastic. I want to welcome Hervé to our Zoom live stream. Hervé, welcome. Great to see you. Would you like to say a few words to introduce yourself?
I'm a chartered accountant. I am in France, in the Paris area, and I work for quite a number of English-speaking clients of several countries. So I assist them with French taxation rules, administration in general.
Okay, fantastic. Thank you for joining us. Just jumping on to the next questions. I'm on question 7. Hello, can you help with a 1040X? You did a dual status return for 2022 and you made a mistake. Okay, so I'm assuming that you've left the US and you're now tax resident in France. And since 2022 is your final year of residence in the US, you're not a citizen and you're not a lawful permanent resident, you're not a green card holder. So for part of the year, you were a US taxpayer and part of the year you were not. Or perhaps you surrendered your green card or passport sometime in the year. So again, for part of the year you are and part of the year you're not. So you're correct, you need to file something called a dual status return, which signals to the Internal Revenue Service that part of the year you're a US taxpayer, but you ended the year not being a US taxpayer. So you're doing a Form 1040. Sorry?
Sorry, no, okay.
Oh,
go on.
Yeah, so you're doing a Form 1040 together with a Form 1040 NR, and depending on your circumstance, you're doing an 8854 as well. Now, to answer your question specifically, if you made a mistake, chances are the IRS sends a rather vaguely written letter. You don't indicate what it was, but they would send a vaguely written letter. And the best thing for you to do is to resubmit the entire thing. And since you made a mistake on your own, you'd probably want to speak with a professional service provider to make sure you get it right, because this is your final return and we don't know your circumstances, whether exit tax calculations are due, etc. So the point is that the implications of getting it wrong can be pretty expensive. So you'd probably want to seek advice to make sure you do it correctly. But you probably aren't able to just adjust one part of it. It stands as one submission. The 1040, the 1040 NR, the schedules and whatever else behind it, as well as potentially an 8854 plus your FBARs potentially. So I hope that helps. Moving on to question 8. Why is it hard for Americans to find a brokerage firm or bank in France or the US that wants to service them while living in France? Cedric, what are your thoughts?
Yeah, so yeah, we kind of touched on that as well. So I think the banks with FACTA, I mean, the banks in France have to report, to the IRS. So they don't usually want to deal with Americans. Some do. Sometimes, we see private banks in Monaco. I have some clients that, want to invest and they're Americans or they want to have a bank account, and it's possible. There's some banks that will help, but they're usually going to have a bank account. They want to have an investment account for the clients. And then, and in the US, like we said, most firms in the US don't want to deal with all these rules, regulations. So then it's all about following these rules and the cost and the compliance issues. So then, yes, I would say it's more and more you see, firms following rules in place, and they, like we said, sometimes it's more of a financial decision.
Mm. And to your point, that's why the bank in Monaco and France would prefer that it's an investment account, so that they know it's worth their while, their effort, the additional compliance burden.
Yeah, because I see a lot of banks in Monaco, and sometimes the minimum could be 1, 5, 10 million for Americans. And the reason why is because of the cost involved. They don't want to deal with an American unless it's worthwhile. So that's why we specialize in helping Americans in France, just because there's really nothing out there. There's not many people are licensed in France and in the US. So it's almost impossible for people to find someone that's knowledgeable.
Understood. So in that case, what would be your role? Would you act as an introducer, or what role do you play in helping that US taxpayer access banking facilities?
Yeah, so pretty much a lot of banks, especially the private banks in France or Monaco, you cannot go straight to them and open the door and open an account. You have to be introduced by someone or have above 5 or 10 million. So what I do is I introduce them, and then we partner together. And depending on the needs, we can help with mortgages, because it's pretty big right now with the wealth tax in France. We can have our clients, Americans, deposit some cash. It could stay in cash, could be invested, but then they can usually leverage that by getting a mortgage with no income requirement of about usually a deposit of 1 million give you a 1.7 million mortgage with no requirements, with a low rate below 5%. So that's the kind of services that we can offer Americans that they probably won't find it on their own, because it's kind of hard to find, but yeah, that's what we do.
Okay, fantastic. Any comments on the challenges that foreigners have doing banking in France?
I do follow Cedric. It is clear that FATCA is a threat for French banks, and they can pay billions of USD if something goes wrong. So small American clients are not interesting for them. And it shows that I have great difficulties for some American clients to open a bank account in France.
Okay.
And it begins to be not only a difficulty for Americans, but also for all countries. Globally, non-residents are not very well considered by French banks. And the problem is that if you have some real estate in France, the French tax office wants a French bank account for paying local taxes, etc.
So you're saying it's not just Americans, but foreigners in general?
I was very surprised to see that a citizen from Luxembourg couldn't open a bank account in France. I have had the case. I don't know exactly why.
Well, I guess to your point, there's a risk. I guess the banks see that there's a risk. If they get the slightest thing wrong, it's not just big fines, but reputational risk as well. So they're just going to be super cautious. So, yeah. Okay. All right. Next question. I'm looking at question 9. Could you please explain how the expatriate tax regime works for those moving to France? Hervé, this may be one for you.
First, it is not for all Americans moving to France. It is clearly a regime that is for for non-residents that would be called by the company to work in France. So you have to benefit from this regime, which is very interesting. You have first to have a work contract that says that your company requests you to come to France. And in this contract, then would be defined what is the premium that the company gives you for an expatriation. So it can be your company that tells you to come to France, or you can have a new contract and come to France to work for this company. But globally, it is not open to everyone, and you have it is open to those who have the movement, I would say, to come to France to work for for a foreign company. After that, it is very interesting because during 8 years, in fact, your premium for expatriation is not taxed, to remain quite simple. But yes, I need it. It needs. I think it needs quite some paper before coming in France, and informing the tax office that you are considered as an expatriate, etc.
Right. So the key, so that's the key thing, and I guess that's what makes it quite challenging. There must be some sort of affiliated company already in France that's hiring you from that related company in the US.
Yes.
Okay.
And it is dedicated usually for high potentials, in fact. So someone that you will get in the US or elsewhere and say, please come to France and I am ready to pay for that.
Right. And is there some sort of, as a high potential, is there like a minimum income that they're looking at roughly?
No, there is no minimum. But in fact, you will need a lot of papers because to define the premium, you will have to compare your salary with the average salary in the same position in France. So, for example, if you are paid 20% more because you were coming from outside, then these are those 20% which won't be taxed. Okay.
I see. As well, so you get a tax break on the increment or the bonus that you're getting from moving to France. As well as, do you get tax breaks on potential capital gains, like if you sell capital assets?
Yeah, there are quite another list of advantages because you will have, in fact, for example, you come from the US, you had some stock in the US. If you sell them, then your capital gains will be taxed only for the half, etc. Okay,
that's pretty interesting.
And there is quite a literature because what happens if I come, then my family comes the next year, etc. So there are a lot of conditions, and in a way, it is quite a dangerous regime. So I think it is important to inform the tax office, shows that everything is in order, not to have a bad surprise a few years later.
Right. So in other words, you should submit paperwork in advance of the move to make sure everything is okay?
Yes, or the text clearly says that you should have a work contract before coming in France and saying what will be the bonus for expatriation, etc. What will be the special...
And roughly how long would the regime be available to that person?
The regime will be available for 8 years.
8 years, up to 8 years.
And it is not open to people who are French tax resident in the 5 years before coming.
Right.
But when you are in the regime, then, for example, you can work 1 year in Germany and come back, and then the regime continues. So it can be quite complicated, yes.
Right.
But of course, it can be very interesting for some people. Yeah.
Right. And after the 8-year period, do you have to leave and go back? Or suppose you really like it in France and you want to stay?
No, the objective is to have people of high potential coming to France. So we are ready to make an effort on taxes. But globally, that's the way. No, after 8 years, you are a normal French tax resident.
Okay, understood. Thank you.
But you had time to get inhabited. Which is good.
Question 10. Can I transfer my US investment accounts to Europe as an American? Cedric?
Yes, that's something that most people don't know that is possible. So if you have a US investment, let's say US ETFs, you have US stocks, they're taxable in the US, you can transfer them to a platform in Europe. But then it's still going to be taxed in the US, and then it's going to be in European custody with your French address, then peace of mind in that case. And then you can still hold the stocks, and then yeah, we can transfer ETFs, or transfer assets in kind and keep them. That's not a problem.
Okay, fantastic. I just saw someone, I think Jennifer, you just asked a question. Can you send it again, because it got lost as things are scrolling up? Sorry about that. Next question. Question 11. Are US pensions and Social Security taxable to France? Hervé.
I was checking the tax convention, and well, it says that pensions made under the Social Security legislation of a contracting state or resident of the other contracting state shall be taxable only in the first mentioned set. So the pensions, if you get pensions from the US, are taxable only in the US. No.
Only in the US. Okay.
Yeah.
So this is upon distribution. It'll only be taxable to the US and not to France. Okay. Understood. And it doesn't make any difference as to the nature of someone's employment before they retire. It's pensions and Social Security, whether derived from the private sector or from the government. Am I correct in saying that?
Yeah, there are 2 articles in the convention. Honestly, I don't know it by heart. Yeah, globally, what is public remuneration is only taxable in the country where it is paid. So,
Cedric, what is your experience with the pension space?
Yeah, this is my experience with my clients. The French pension only taxed in France, US pension only taxed in the US, Social Security as well in the US. So yeah, so that's a great benefit, because the tax treaty between France and the US is one of the best. Because I see clients in Australia and other countries where it's not always great. Sometimes even the Roth IRA is taxed in some countries. Italy has some extra taxes as well. So, but France, no, France is great.
So just to be clear, whether it is a Roth or IRA, whether it's derived from public service, private service, doesn't matter. It will only be taxed in the US and not in France.
Yep.
Okay, so that's good news. Definitely good news, because next door in Spain and in Portugal, American clients have lots of issues with that. So France wins.
Yeah.
Okay, moving down. Okay, question 12. Can I invest in ETFs as a US expat living in Europe? Cedric.
Yeah, that's a question that I hear often, because Americans want to diversify. Sometimes they don't want to invest in individual stocks, because they know that there's PIFIC issues if they buy mutual funds in Europe. So then for my clients, if it's an IRA, we can buy ETFs. There's no issue. When we have cash investments or taxable investments in Europe, then it becomes a little bit complicated. Sometimes clients have to be professional clients in order to, with the MiFID rules, in order to buy ETFs. You can go around that. We use different platforms that we can have, model portfolios of US ETFs that are made for our clients that are, consisting of US ETF. We can also move over ETFs from the US and we can keep them as well in Europe. And then if a client has at least 500,000, and then we can, they can be considered professional clients. They have different rules to follow, but we can work with them to get them compliant, and then we can buy ETFs for them.
So bottom line, it is a challenge but you and your team have ways of legally and properly working around it. Okay.
Exactly. Yeah.
Okay, sorry. Someone is sending me a message on another platform, so I need to read it off here. Okay, so someone is asking, if you were recruited and have worked in France for a year and filed your first French tax return, but you didn't know about this special regime, and your contract didn't mention the bonus for expatriation, is it possible to define the bonus for expatriation retroactively? Hervé.
If you are a gamer and want to take some risk, why not? But
Okay.
I wouldn't suggest you do that. Because I would consider it as dangerous. There's a risk you have for 1 year it will do, and the second, the third year, the tax office will come back and knock at the door and say, please justify that you were an expatriate. It is quite, honestly, we don't see that regime every day. Okay, so it exists in the law. It is not for everybody. And I see it. There's a few examples I have seen where only in big companies such as Sanofi or something. It is something you do with your employer. You don't do it alone and by yourself.
Cedric, any comments or thoughts you want to share?
No, I don't have any comments for that. Yeah.
Okay. So the ideal really is to do it in advance and not retroactively. If you want to do it retroactively, you're taking a risk. So it's generally not.
In that case, I would suggest you to look closely at the text and maybe, for example, come back for a few months and then return. Why not? See, you have people who count the days just to be sure in which country are tax residents and so on. So if you are aware of the problem, maybe you can be intelligent and look closely at the text.
Okay. So she says she's happy with that answer, and she's very risk averse. So okay. Enough said. Next question. Okay, I'm a freelancer living in France, working with US clients, and yeah, so they live in Strasbourg. They're Lebanese citizens, but they're tax resident in France. So the question is not very specific, but I guess we can just kind of speak to the issues. As a freelancer, you need to properly register, make sure you're properly registered as some sort of auto entrepreneur or self-employed. You speak to someone like Hervé, make sure that everything is compliant. We had that question and that conversation earlier about whether or not you should be charging VAT to the clients in the US, and that's a conversation that they probably need to have as well.
Sure.
And any other thoughts, Hervé, on just a general situation like this?
First, some general answer. If you live in France, then you have to pay social. If you work in France, you have to pay social contributions in France and tax in France, even though you work only for US clients. As for VAT, usually a freelancer does services, and services will be taxed where they are produced for VAT. So globally, so VAT should be taxable in France. Of course, I have clients who are wherever in France. There are some clients I have never seen out of a Visio. And there is no, the fact that this man is Lebanese doesn't matter at all. only the tax office in France only looks whether you are a tax resident or not. After that, the law is the same for French people, for American, for Lebanese people.
Indeed. And assuming, well, we don't know the nature of the work being performed, but let's assume it's some sort of consulting service. From a US point of view, generally speaking, there should not be any US tax issues at all. Because as you said, the work is being performed in France. So it's 100% a French tax matter, not the US. Assuming there's no agent, dependent agent, there's no permanent establishment in the US, 100% French tax only.
Except that, for example, if he has a mission in which he must spend, for example, 3 months in the US, then maybe he can consider he has a permanent basis in the US, and then for his earnings in the US, then he would be submitted to US taxes, and this would not be considered in the French taxes.
That's a very good point. So if it is, whoever asks this question, if it is that you have any physical presence, do you have any boots on the ground in the US at all, that changes the whole structure of what we're discussing.
The matter is not spending 1 or 2 days, it is having a permanent basis in the other country.
Indeed. Okay, so I hope this helps. If you want to get specific advice, please reach out to Hervé directly, and he'll be able to guide you. Okay, question 14. I'm looking forward to today's webinar. My general questions are around tax equalization for retired American expats living in France. For example, if taxes are paid in the US on interest and capital gains, does it mean no taxes are paid in France? Or are there nuances and thresholds we need to be aware of? Am I correct in assuming France will not tax Social Security and withdrawals from my IRA, Roth IRA? A lot of questions there. Hervé, do you want to take a bite?
Just to say that the principle of the tax convention between France and the US is that a single revenue is taxed in one country or another, but is not double taxed. After that, the tool used to avoid this double taxation is to say that the revenue that is to be taxed in the US is to be declared in France, but there will be a tax credit that will annihilate the French taxation. However, I don't know exactly how this tax credit is calculated, and I would say it would annihilate the French income tax. I wouldn't be sure it annihilates, for example, CSG, which is a tax that is used to pay social contributions or the health services. So there is a tax credit. You must declare, and there is a tax credit.
Okay, so I guess that he speaks about that there's retirement income, there's interest income, and there's capital gains, right? So the retirement income we discussed at length previously. So that'll be taxable in the US only, not in France, all things being equal. In terms of the interest and capital gains, we're saying, well, it's US source, so the US is going to tax it. But when France looks at it, they'll give a credit for what has already been paid in the US. And the difference, if any, would be payable to France. Am I correct?
No, I think you're correct. Yeah.
I think so. Honestly, in those cases, I go back to the tax convention. I read it, and there are so many cases that I prefer to read again the tax convention before answering.
Yeah, absolutely. So whoever asks this question, please reach out to Hervé directly.
With some countries, for example, there is a taxation at source. And so there is, for example, 5 to 15% that is taxed in France or something like that. So There are honestly in the world quite a lot of different cases.
Cedric, any comments or thoughts?
Yeah, I think, yeah, you're right. Yeah, there's no double taxation. If it's a pension, a retirement account, then it's great. You don't have to worry about it. The Roth is tax-free in both countries, so then that's a great thing. And then yeah, I think everybody's right. And then each case is different depending on the income. But yeah, I would say most U.S. investments are going to be taxed in the U.S. only, and then there will be a tax credit in France. Yeah.
Okay.
And you may think I am a bit too careful, but I have seen cases of people who have gone around the world. And so, for example, they have some money in the US, but also in Germany and also in France. So we have to study all the case of the client, and maybe it does not depend on only one tax convention, but maybe on several, depending where he has revenues and properties.
Correct, because I've spoken to clients who have, in this case, they would have left France to go work in the US or work somewhere else, and they took a position which is a literal interpretation of the tax treaty, but then the French tax office issues them a notice saying that it's what's the translation, an abuse of the convention, and they deny it. So I agree with you that that generally speaking, people need to be very, very careful and not assume because they saw it in a Facebook group or they heard it from a friend that it is a legitimate position to take. You need to look very carefully. Okay. All right. Oh, somebody is just saying thank you. Okay. Just going through messages. Okay, the last question is pretty long-winded, but let's quickly summarize it. So someone is US and UK citizen. They now live in France. Just kind of summarizing it because I don't want to give too much personal info either, right? And now that they've moved to France and they're working from France, they're working still through the UK company, even though they're not properly tax resident in France. And from what they're saying, there's no real substance in the UK. There's no staff in the UK that's like them working alone. So anyway, so they set themselves up as an auto entrepreneur in France in order to qualify for the carte vitale. So the question is, do you have any comments on this structure? More specifically, can it be simplified? Hervé, what are your thoughts? Just top line, just very generally.
My general thought is that if they want a carte vitale, well, it means they work in France, so they have to pay social contributions in France. An English company, a UK company, can employ someone in France without having any establishment in France. The case is well described, and we have solutions for that. What I say is, depending on the amount of revenue, a structure always generates cost. So if there is not such a great revenue, please make it simple. Because to work, you can work with the US with a French company, you can work with the UK, there is no problems with that. So what is the interest at having a UK company? I don't know. If basically, if you have some permanent people working in France, it will mean you have a permanent basis in France. So for this part of the activity, you will be taxed under French laws. So really, what is the interest of having a UK company if you don't have any real activity in the UK? I don't understand. It seems for me a useless complexity.
So So again, we don't, the person provided a lot of info, but it's not all of the info. So there are parts that we don't know. So I have a thought, because often I hear other tax advisors propose all these very exotic structures. Why not use Estonia? They want to use Cyprus, they want to use Malta. My thinking is, and give me your thoughts, please. If it is that there's no real economic substance in any of those other jurisdictions, won't the tax office in France then take the position that the structure can be set aside and everything be taxed in France?
I would first consider what is the objective of the client. It is not the same thing if you intend to spend 5 years in France and go back to another country, or if you want to stay 4 years and have your living in France, etc. Because usually we say we have a lot of heavy taxation in France, but globally French people don't live so badly. So maybe it's deferred revenue, etc. But if you're so first, what are the objectives? How do you see the future? And if you want to stay for a long time in France, we have very good financial products in France, and I can never be sure that a financial product from another country will be eligible to some tax reduction in France. Well, I should say, if I had a client that would ask me, we would read together the tax convention. It doesn't say, oh, it is an IRA or Roth IRA, etc. It is, do you earn some interest? Do you earn some pensions? Is it capital gains? I would say it is very simple words. So don't try to do something too complicated if you want to change often from one country.
Cedric, any thoughts?
Yeah, I'm actually like helping clients in the same situation. Americans that maybe worked 5-10 years in the UK, now they live in France. So I have investment licenses in the UK. So they have the same kind of pensions in the UK. It's a defined contribution, defined benefit plan, and then after Brexit, it's been really hard for British expats, or especially people that have those private pensions, to either cash them out or to manage them from France. So we do the same kind of rollovers. So we can help with their US IRAs, 401ks, but also I help clients with their British pensions. Then we can roll them over, manage them, for them. And then it's important to understand the rules. And when you move from the UK and the US, most people start saving when they're younger, and then when you save in different countries, then you have to know that there's different rules. So you cannot combine the accounts. So a lot of people ask, can I combine my UK pension with my US pension and my French pension? No, they all have to be separate, but we can assist them with that.
Yes, tax offices don't work together.
Yeah.
Wonderful, gentlemen. Thank you so much for sharing some of your time and your insight. Cedric, if someone wanted to reach out to you to discuss these matters further, what's the best way for them to reach you?
Yeah, I work for Harrison Brook in France, so they can email me. I don't know if we can share my information, my phone number,
Please.
But so my phone number is a French number, +33 if you're out of France, but if you're in France, 0767617406. And I'm happy to, I usually give a free consultation for clients, because we want to build a relationship, get to know them before they make a decision to move forward. And so happy to help.
Mm-hmm. And Hervé, you put your number.
References in the chat box.
Okay, so it will be hb@cabinetbelouve.fr. So yes. That is CABINETBELOE. Oops, somebody typed something like that. oeuvre.fr, and Cedric's email, for those who can't see it here because on another platform, it's Cedric, that's CEDRIC .Bernier, BERNIER, at harrisonbrookusa.com. Gentlemen, thank you very much for your time. Deeply appreciate it. And we'll see you all next time. Thank you. Bye-bye.
Thank you.
Thank you.
Bye-bye.